Hey everyone, welcome to another daily editorial here on the KE Report on Monday, November 10th, chatting with Craig Hemke, founder and editor of TF Metals Report. Craig, it's a good day for the markets. It's a good day for the metals. Big question is this the end of the correction? Again, only time will tell, but let's talk the here and now about what is causing this really all around rebound. It is the US government reopening and the potential of at least Trump saying that you could be seeing $2,000 in your bank account as a dividend because of all the tariffs. Now, that's not a guarantee right now, but Trump has tweeted that out, and it's in some of the headlines, but that also ties in with the government finally at least starting to reopen. All this is causing markets and metals to move higher. Craig, is this something that we can hang on to, or is this just going to be nothing more than kind of a 1 or 2 day bounce?
Well, hi guys. First of all, I'm sticking with my, I guess, forecast, if you will. I mean, I think this consolidation phase extends into next year, but I think everything you've seen this year is simple front running of what's coming next year, which is a resumption of overt QE, maybe yield curve control. Who knows what plans are out there for the remonetization or revaluation of the US's gold, all that stuff, I think, is being front run this year to some extent and is going to carry over into next year. The next breakout which should be another 15 or 20% and take gold to $5,000. But I'm not sure we're there yet. November still not the best seasonal month for gold historically. That's more like middle to late December and into January and early February. So I think it's more likely then. However, this rally today has a couple things going for it. In my daily podcast at TF Metals Report, we talked about this back on Friday. One, it's a clean week, if you will, with the government, U.S. government still closed. We don't have any data we got to worry about. I've seen some reports today that maybe we could get a jobs report for September as soon as late this week or early next. But for now, there's no government data, no CPI, PPI, all the stuff we would have gotten. But we also don't have any option expirations looming. All of the monthly New York Stock Exchange options on the mining shares, the big ETFs, that's not until a week from Friday. And the COMEX options on the December contracts are not until 2 weeks from today, the 24th. So there was a potential to have this be a good week. Wish I'd acted upon that potential. I looked at my own option account 3 different times on Friday and just gauged everything as too expensive still. And I was like, wish I'd acted because the stage was set. And there were a number of things. Yeah, you mentioned the Trump thing. We can get into that. But you just go back to Friday. There were a couple of pretty major headlines that I think are helping to move this day. Goon Williams from the New York Fed suggested that QE is coming next year. We don't have a jobs report, but the Fed and their economists calculate the unemployment rate. And that report came out on Friday, and they think it's at 4.4%, which is up from whatever we were, 4.2 on the last BLS survey from whatever it was, August. Central bank gold demand soared in October. We were told that it was central banks that were selling. That's why gold crapped out in middle of October. No, we have massive central bank gold demand, maybe most notably from Brazil, which hadn't bought an ounce since 2021, and they bought 16 tons. So a number of really important things hit even just last Friday. Like I said, we got a clean calendar for the week, and we're off to a good start.
Well, some solid points there, Craig, about the clean week. Not a lot of options friction, not a lot of data. Yeah, maybe we'll get that September jobs data, I guess better late than never. But when you look at it, you brought up central bank buying. You also mentioned people were front running the potential revaluation of gold on the U.S. balance sheet next year. But it just seems strange that if the government was in danger of closing or was, going through these gyrations, you understand why gold would be acting like an insurance product, and a guard against fiscal malfeasance. But then when you see the government reopening, you would think some of that pressure would come off and you would expect gold to maybe come down because, the insurance policy is not as needed. What else do you think could be juicing things here in the immediate term? Because worrying about the U.S. resetting the value of the gold in the balance sheet is kind of further off afield. Why is gold responding so positively today?
Well, and again, I think a bigger driver for where this is headed next year is the resumption of QE and even yield curve control if necessary. And that's what I think is being front run. Plus, all this gold allegedly coming back to the US and whatever the US's plans are for that. There was also note back on Friday and reiterated again yesterday about how much this government shutdown is actually impacting the US economy. One of the Trump's chief financial advisors said he thinks we could take 2% off of the fourth quarter alleged growth that we're having because of the shutdown. And I think the last thing, to your point, Shad, what has really happened? So they shut the government down for 6 weeks or whatever it's going to end up being, 7 weeks. I guess in times past, there's usually maybe there'd been some deal that would be made. Well, okay, henceforth we are going to be a little more pragmatic in our overspending. And there's nothing like that this time. I mean, even like you think about all these government employees, the air traffic controllers or just, the people that are deemed non-essential and so they haven't worked for 6 weeks. They're all going to get paid. I mean, they've all been gotten a 6-7 week paid vacation. It's not like, there's no back. No, they all get made whole. So at the end of the day, what really happened? I mean, the government just kept spending and spending and taxing, and not much has changed. And so I'm not sure if the shutdown, closing, reopening, all that stuff is that as big of a driver of what you're seeing today than it is this collection of other things that are pointing toward a pretty big 2026.
So, Craig, I want to recap some recent data that the World Gold Council put out more on the investment demand. Looking at gold-backed ETFs for Q3, there are some records in here from U.S. funds. So global inflows into gold-backed ETFs, $26 billion. Total holdings rose by 220 tons. What was striking about this is the U.S. contributed 62% of this global demand. Year to date, cumulative inflows for North American gold-backed ETFs, $37 billion. This data is on pace for the strongest annual performance ever. So it seems like U.S. funds are waking up to gold and they're investing in the ETFs. Just wondering if you saw any of this data and what you take away from just how strong investment demand in the U.S. has been recently.
Well, and I would take it one step further, Corey. Again, we're talking, what was 26 and $37 billion? Is that what the numbers were?
It was 26 billion just in Q3. That was global holdings. In the US, it was 16 billion. Year to date, it was 37 billion just in North American gold-backed ETFs.
Well, I hadn't specifically seen those numbers, but I had seen early last week the market cap of just Nvidia hit $5 trillion. $5 trillion. And then due to a number of things, it fell to a low Friday of just over $4 trillion. The stock was down on the week last week at 1.18%, and then it rallied late Friday. That's a trillion dollars in one single company that, either got evaporated, got sold and went someplace. $1 trillion. And I don't know. Some people would look at that 37 billion into gold ETFs and think it's some kind of a bubble. I would take another tack and just say, I think you mentioned the North American investors waking up. Okay, yeah, a little. When there's trillions and you add up Nvidia plus the other big five, and it's like $20 trillion, and yet the entire GDX is 20 billion. It's 1/10 of 1%.
Craig,
there's a long ways
we
to
get
go.
this all the time, but look, if we're talking about gold-backed ETFs, those don't actually make any money, right? It's all driven by investment demand. Nvidia generated total revenue of 54 billion just in Q3. So is it fair to compare something like Nvidia or the tech sector that is out there generating profits to something like gold that is usually a safety or simply just an investment play?
Please let me clarify that, Corey. I'm not comparing the two. What I'm suggesting is how much cash there is globally that can be rotated from one sector to another. And if you've got $20 trillion dollars in five stocks and you just take 5% of that 20 trillion, a trillion, and roll that into precious metals and miners, where does it go? There's just so much cash. Yeah. I'm not going to try to say that Agnico Eagle makes as much money as Nvidia because whatever, it doesn't. What I'm saying is the world is awash in cash. This is kind of crack up boom kind of stuff. And as it sloshes around the planet, there's only so many places it can go once the focus really turns to the precious metals. And that's why I think there's still a long ways to go.
Well, Craig, just to that point about all the cash sloshing around, there's also been a lot of news out over the last, let's say, 2 to 3 months, well, even 5 months, from financial institutions that are now scrapping the old 60-40 plan, 60% equities, 40% bonds, and looking at a 60-20-20 plan or something like that, where it's 60% equities, 20% bonds, and 20% what they're calling alternative assets, with gold and gold equities being a very favored area to diversify. Is it possible that we're also starting to see some of those inflows into those ETFs coming from people rotating out of bond funds and into precious metals funds?
Of course. Yep, for sure. And which is another, big pile of cash. Again, I just, if I'm correct, and I like to think that I am, and the gold price is going to 5,000 plus over the course of next year, and that silver, once it firmly breaks above 50, sets off on a course like gold has been on for the last year and a half, that spotlight and the desire to be in our sector, the fear of missing out, whatever, is going to that's just going to burn brighter and brighter. And people will take, okay, you know what? Yeah, let's trim. The guy calls up his financial planner or his stockbroker, his financial advisor or whatever, and says, yeah, you know what? You're right. I think the quants at your firm are right. I've got a $10 million account, 60%, $6 million in stocks and $4 million in bonds. Let's trim that a little bit and put $2 million into gold and Bitcoin ETFs and all this other, whatever else you call dollar alternative debasement trade, whatever. But think of how many people are out there like that. And they don't just have $10 million. They've got a couple $100 million, a couple $1 billion in a hedge fund. So I don't know. I saw a thing over the weekend of Doug Casey talking about how this is a generational type thing, if we're right. Generational wealth in the mining shares and the exploration companies and all that kind of stuff. If we're right, then he's right. And that's kind of what I'm getting at.
Hey, hopefully these stocks can take that leadership again and continue to outperform every other asset, because so far it's been a great performance. Just needs a longer term bull market here. And to that point about other money looking at this sector, let's talk that on an M&A front, because we're continuing to see some pretty big M&A deals for the resource sector, majors and mid-tiers getting active. But that outside money, if it's looking to invest in the sector, Craig, any chance we could see something like Tether, that cryptocurrency company, the one with the stable coins? Any chance we could start to see some outside money start to take over some other gold mining companies because they're seeing value in the sector?
That's an interesting thought, isn't it? And Corey, you're absolutely right. You wonder where that could head. It's a little bit like, if the stories that I read, and I'm sure you've seen, about how much silver is in the vaults of Shanghai and how much silver is, in the free float in London and all that kind of stuff. So what I'm getting at, it's a little bit like a big silver user, not even at the sovereign level. Just pick a company that can't continue to manufacture their product without a guaranteed stream of silver, like any other input, a guaranteed stream of widgets, a guaranteed stream of tires, whatever. We've always wondered, which would be the first company that would say, you know what, we're not only just going to strike a deal with this mining company, we're going to buy the whole thing. And that's kind of like what you're getting at with Tether or any of these other massive stores of what essentially dollars, right? So anything is possible and plausible, and again, in this kind of crack up boom phase of where we're at, where they got to let it run hot and they got to create cash and they got to do everything they can to keep the economy going, to generate revenues, tax revenues, and everything else. And again, I think this is why you can't say it was a bubble. You can't say it was some parabolic top, all that kind of stuff. All the naysayers and perma bears and bubble poppers and wave counters and everybody else that I've come across my Twitter feed in the last 3 weeks. Yeah, okay. Yeah, you get a little pullback. Happens all the time. It's been happening like pretty consistently for the last 18 months, but I just don't think we are anywhere near any kind of long-term top.
Well, Craig, I know you also follow the silver space very closely, and I was curious about some news that broke over the weekend on Rogue Economics run by Nomi Prinz, and she was bringing up the fact that kind of quietly on Friday, because Friday was kind of a turbulent day with a lot of different news, the U.S. government posted its 2025 list of critical minerals, and guess what got added to the
Yeah.
list? Copper, silver, uranium, about 10 other things. But silver is now a critical mineral. Does that change the way the general public looks at silver now in light of all this attention it's getting from this administration?
Yeah, that would have been another good bullet point to put on, from late last week with Goon Williams and the Fed's unemployment rate and everything else. Yeah, I don't know, I sensed a perception at my site trolling around on X that, this was some immediately bullish news. I don't know, maybe it was. I mean, look at silver's now back over 50. But it's more of a long-term thing, right? And we'll see what, if any, steps the US takes in regard to those critical minerals. I mean, we've heard a lot of talk, about direct investment in critical mineral mining companies, the tungsten and rhodium, and you go down the list of all the EMs. Whether that would extend into copper and silver and the others that are on there, I'm not sure. If anything, there might be some export restrictions. Not that the U.S. exports any silver. The U.S. imports what, 80% of the silver demand. It'll be very. I guess that what I'm getting. It'll be very interesting to see which policy changes it leads to, and then we can assess from there the relative bullishness of what it all meant.
Yeah, that's a good point, Craig, especially on the front of if the U.S. government starts giving some silver companies some money, because that seems to be the biggest driver behind some of these critical or strategic metals, which now seem to be a pretty long list of different metals and minerals constantly getting added to. But again, if the government starts putting money into these companies, then it really causes a spike in prices. Craig, in terms of an outlook, then, we're nearing the end of the year. What is going to move markets? What could change the direction of metals or the broad averages in your eyes? Or is it just going to be kind of more of the same, watching the same sort of stuff?
Well, if anything, let's look at the general seasonality of the markets. Many people are familiar with the Santa Claus rally, right? In the stock market, and how the end of the year is usually a pretty good period in stocks, which, okay, we'll group that all, let's call that risk on if you want to. All of us in precious metals are used to the tax loss selling season that usually extends into about between the 15th and the 20th of December. Not a lot of losses this year, though. So we'll see how that rolls. Typically, then, again, anything can change year over year, but typically middle of December through January and early February is about the strongest 7 or 8 period of the year for the precious metals and the mining shares. So I'd be very interested to see how we trade once we clear November and get into December. I know we've had a great day today, but we're going to now, and all of this, who knows, maybe we're in a whole brand new world with, the way spot is trading versus futures and silver and everything else. But as we get into next week, as we began this discussion, 20 minutes ago, as we get into next week, we're going to have option expiration next week for New York Stock Exchange. We've got the COMEX options expiring in 2 weeks. We got the December contracts, which have been the front month for both gold and silver since freaking early August, late July. those are going to go off the board and go into delivery, and everybody's going to be watching that closely. I suspect, again, even I guess what I'm getting at, even with this rally today, I still think at least the next couple of weeks are going to be kind of choppy, and that may extend into early next year even. Again, the most recent consolidation period in gold was April to August. So if that would if we go 4 months again, we're talking October into February. But again, as we look forward as to what I think is coming next year, I don't think we've seen a top. I don't think we're rolling over. I mean, we may consolidate for a while longer, but the next breakout is basically pending. We just have to see when it starts.
Yeah, a lot of the technicians that we talk to are also saying could stretch for a few months into next year. Regarding tax loss selling, there aren't going to be very many people that even have tax losses to take advantage of this year, except if you bought really in the last month. So whether that will change, one thing to consider is a lot of shares will be coming free trading from a lot of the financings that were done. So maybe that could be the overhang as well. Oh, we will see, but we'll keep talking about it week after week. So, Craig, thank you as always for your time, and everyone, click that link in the show notes to visit the TF Metals Report website. Follow along with what Craig is writing. Have a great rest of your week there, Craig.
Thanks, guys. Have a great week.